Hello, ladies and gentlemen. Good morning to you, and I welcome you to yet another promising session on this morning live hour. My name is Sheriff Daramola, as usual, and for the next 30 minutes thereabout, we shall be dissecting the current market structure from a technical standpoint with the utmost intent of identifying trading opportunities ahead of both the New York and the UK session. So I would like us to confirm that you can hear me. From my own point of view, from my hand here, I can hear myself using my monitor device, but I don't want that situation that happened a couple of weeks ago to happen again. So if you can hear me, I would appreciate that you give me a positive feedback in that regard in the comment section so that I can be sure and confident that we are good to go. So with that being said, the first thing we are going to be doing this morning as usual is to keep tabs of the fundamental perspective of the market by looking at the economic calendar to see if we do have any macroeconomic event to look forward to today. And looking at the economic calendar here, I already pulled this out this morning. So today is Wednesday, April 5, and we have a couple of macroeconomic events to look forward to today. And based on the pairs that we have been monitoring since the beginning of the week, we are going to be focusing on high impact event, high prioritized event that will be affecting the US dollar, the pound sterling, the Japanese yen, and which other one again is that? Okay, I think those are the three ones we want to be focusing on. But for today, we only have a couple of events affecting the US dollar. So the first event is coming up, I think about 3 to 4 hours from now, and that is the ADP employment change. So the ADP employment change is a data which measures the change in the number of employed people in the US economy. So obviously, a rise in this will definitely be bringing a positive spotlight to the US economy, hereby increasing the value of the US dollar. And if we look at the data we had in the previous month, we can see we had 242,000 as against the projection of the consensus for today at 200,000. So that's a little dip to the downside of the previous data. So we might be a little bit dovish for the US dollar today, but we still need to wait for the actual event to see if the results will be coming in just as expected, below expectation, or beyond expectation. Then the next one we are going to be looking forward to, which will be coming up in 5 to 6 hours from now, is the ISM Services PMI. So this shows the business condition in the US non-manufacturing sector, and it's also a very high impact indicator that gives us a clue into the manufacturing sector in the US economy. And usually anything above the 50 is something positive for the economy, and anything below the 50 is negative for the economy. And if we look at the previous data here, we have a 55.1, which is the previous data, which was on the positive side anyway. And we have a consensus projection for today at 54.5. So it's a little bit to the downside compared to the previous data, but is still on the positive side. So we are going to be looking forward to the actual data that will be coming on later today. Is it going to be as expected, below expectation, or just as expected? And obviously we shall be seeing the reflection of this anticipation of this macroeconomic event on the chart as price action, as every major players in the market will be looking forward to this, and we might likely be seeing some consolidation phases happen prior to this event before the immediate reaction start happening. So we shall keep this in tabs, we shall keep this in mind as we monitor price action to decipher how to position ourselves ahead of both the New York and the London session. So with that being said here, let's dive right into the business with the hopes of identifying a potential trading opportunity for today. So with that being said here, I will be diving right into the chart, and the first commodity we are going to be looking at this morning is the US oil. And on the US oil here, though we have been expecting a bullish momentum since the beginning of the week following the latest development regarding the OPEC Plus decision to cut oil production, and though we saw a huge bullish gap at the beginning of the week, but one thing that caught our eyes at the early hours of the week was the fact that price was caught within a channel here between the $80.50 level and the $79 area, giving us a clue that there is an indecision in that market where the potential of a reversal pattern and a trend continuation pattern is very, very likely. And you all know what we look out for whenever we have this kind of simple setup. We need some confirmations to happen, which is always going to come in the form of either a breakout of the channel or a breakdown of the channel for trading opportunity. So with our stop orders placed at both ends of the channel here, we had our buy stop order triggered, had a breakout of the $80.50 level, and I told us all yesterday how price action had been consolidating just around the $80.50 level, which lasted about 24 to 36 hours on this time frame, and we saw how price just went on oscillating just within this area to further give us a clue into the indecision in the market, as majority are not sure if this impact of the OPEC Plus will skyrocket price. So we're still holding on to our positions here. But one thing that happened yesterday was this engulfing candle after the rejection of the $81.25 level, which took us out of all our buy position as at yesterday. And you all know what we decided to do yesterday, that if we have price action break down that bullish trend line, then we will be looking forward to a momentum shift. And one thing we said yesterday is that if price action breaks down, we still need some confirmations to happen before we want to be joining that bearish move, which is likely going to be coming in the form of a retest of the structure that was broken to the downside, where selling pressure will give us an opportunity to sell. So till this moment, we are yet to see selling pressure resume, though we have seen price action back into that zone between the $81.25 level and the $80.50 level, which we identified during the live session yesterday. So now, with the situation of things right now, our center of focus for today is going to be between this channel here, the $81.25 level, which happened to be the new resistant line for the week, as this is the highest point price action as closed for this week. And then we have the previous resistant line, which was broken at the $80.50 level, though we saw a little breakdown of the structure, but buy pressure here negated sell momentum. So the only way to sell at this point is to see price action drop below the $80.50 level, and with a sell stop order below that structure, we will be having a sell position triggered. So that is one perspective to it. Then another perspective to this is a buy stop order sitting above the $81.25 level, with the hopes that price action will take out all the sell position that we have been witnessing here since in the last 24 hours to incite a trend continuation to the upside. So this is where our center of focus is going to be for today. So I hope that we'll be on standby to catch these moves. And with our stop orders at both ends, let's hope that price action will move significantly once we have the breakout of either of this structure. So be rest assured, definitely I will be with you in the comment section on my TradingView platform to give you an update on what my expectations are, if anything new springs up along the line. So if you do have any questions, or you need me to do some clarifications to an aspect which you really didn't understand, feel free to drop your inquiries in the comment section. So that is that on the US oil. I hope you screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. So with that being said here, I will be moving on to the next pair, and the next pair we shall be looking at this morning is the GBPUSD. Now on the GBPUSD for this week so far, we have been profitable, though we went in very late in this market. So I would like to run throughout the week started with us here before I go into the details of what our expectations are for today. So on the GBPUSD, the week started on the bearish note actually, as we saw price action started the week at around the 1.23320 level here, which was the initial resistance line for the week. Then we had price drop into the 1.22750 level, as you can see here, giving us a situation where price was within this channel around this area. And one thing about the structure that didn't suggest I buy at this particular point in time on Monday was simply because of the bullish trend line that we identified on the daily time frame. If you remember, if you recall, and if you had watched my video on the GBPUSD, which I shared during the course of the weekend from a long-term perspective, you would have noticed that bullish trend line here. So for the sake of clarity, I would like to bring that back. So here we are on the 4 hours time frame. So we saw the bullish trend line here, which was consistently respected by price action, further emphasizing the strength of the buyers here since the beginning of the month of March. And not until on Friday last week, we saw the breakdown of the structure, which happened to be the first time price action will ever break down that structure. And this is, from a technical standpoint, this is a very huge signal that we might be in for a momentum shift. So because of the situation here, I decided not to think of buying the GBPUSD unless price action climbs above the bullish trend line. So at the beginning of the week, the opinion was that price breaking down the structure will come back and do a retest of either the 1.23200 level or the trend line that was broken last week to incite a trend continuation. But it appears that that is not the case here. Price action climbed up, broke out of the structure to the upside, continued to find higher highs to give us a clue into the strength of the buyers at this particular point in time. So what we did here yesterday, I think on Tuesday? Okay, yesterday was to look at the structure we have here on the 1 hour time frame, that is at the 1.24200 level, which you can see here has been a strong selling niche since Friday of last week trading session. And I told us all on Monday that we are going to be waiting for a breakout of that structure to confirm the bullish trend in this market. So we actually missed this one from this area to this area, which was quite massive, but we were lucky enough to be part of this one on Tuesday morning as we joined this bullish momentum to the upside. And in fact, price action moved about 100 pips thereabout before the sell pressure began around the 1.25200 level. So I would like to zoom into the current structure right now, which is where our center of focus is going to be for today. So now, as you can see what has been happening here in the last 24 hours now, you will see that as soon as price tested at 1.25200 level, we have been witnessing selling pressure around that area, hereby negating all attempt by the buyers to break out of that structure. And this fell into a situation where price was trapped within a simple channel here between the 1.25200 and the 1.24700 level, giving us a clue into the indecision in this market. And whenever we cite indecision phases like this, it's a sign that a major catalyst is coming in. And like we discussed earlier before the beginning of the analysis, that we have a couple of macroeconomic events that we are going to be looking forward to today, and we can see the reflection of this anticipation on the chart as a consolidation phase right now, as everyone is standing by to see what data will come in and how the market is going to be reacting in anticipation and after the event. So we are going to be using the simple setup. You all know what we look out for whenever we have this kind of simple setup. We need price action to either break out of the channel to the upside, that is the breakout of the resistance line for buying opportunity, or the breakdown of the support line for selling opportunity. So let's talk about the first perspective here, which is more of the bullish momentum, considering the long-term bullish momentum we have been witnessing on this chart. So I would like to extend this bullish trend line which we identified on the 4 hours time frame a little further so that it can capture the future price action on this chart. So right now we have a situation here where price has been in a consolidation phase, and this could turn out to be a trend continuation pattern where a breakout of that resistant line could incite a move to the upside. So with a buy stop order above the 1.25200 level, we are looking forward to a trend continuation to the upside here. So let's hold on to this bias here with the hopes that price will break out of that structure. However, if the contrary happens in such a way that price action drops below the 1.24700 level, we are not going to be having a sell stop right away at this current area. And the reason why we are not going to be having a sell stop order right away is simply because of the importance of the buy pressure in this market. And you can see we already have a bullish trend line which further emphasizes the strength of the buyers in this market. So we will need some more confirmation for us to be confident enough to join a bearish move if price action ever breaks down that 1.24700 level. And this will reflect on the chart as a retracement back into structure or a retest of structure. So as soon as price breaks down the 1.24700 level, which happened to be the support line of this channel, then we want to scale down to our lower time frame to look out for retest of structure, which will definitely come in the form of something like this, probably come into structure, and then we start seeing selling pressure resume, giving us a clue that buyers are finding it difficult to climb back above the 1.24700 level. And if this happens, then we want to be anticipating the bearish momentum to the downside. And if this continues where price action transitions into a reversal pattern on our lower time frame, then we shall be in for a sell momentum to the downside, where a further breakdown of that bullish trend line will now give us that beautiful confirmation we are looking forward to be part of a sell momentum to the downside. So this is how we want to be taking advantage of this trade for today. And be rest assured that I will be with you in the comment section on my TradingView platform to give you an update on what I think is going to be happening as soon as price break down the structure or break out the structure, and how we are going to be adding more position at every strategic point in time as price action evolves. So that is my view here on the GBPUSD. If you have any questions, feel free to drop your inquiries in the comment section. So that is that on the GBPUSD. So I will be moving on to the next pair, and the next pair we shall be looking at this morning is the XAUUSD, where we were able, I think in the last 24 hours on the pairs that we have been monitoring so far this week, the XAUUSD appeared to be the most profitable trade for us in the last 24 hours. So what was our expectation during the live session yesterday, and what were we looking at prior to the beginning of the week too as well, is what we are going to be deliberating on here before we go into the details of what our expectations are for today. So right here, look at the structure we have here. It's a very simple setup anyways, but I will try to break it down for a better assimilation here. So at the beginning of the week, we saw a situation where price action actually started on a bearish note for this week, as we saw price action resume the week at the 1,971 level here. So we saw selling pressure resume around that area. Price dropped down into the 1,957 level, where we saw buy pressure resume, and at this point we identified our first support line. Then price was unable to continue to the upside here, and with the breakdown of the structure prior to our Monday morning live session, I told us all that we might be seeing the bearish signal that will give us that momentum for the week. But unfortunately for the sellers here, we saw this engulfing candle taking price to the upside, and I was of the opinion that Monday that we might likely see selling pressure resume. So because of the expectation of the sell pressure, we missed out on this buying opportunity here. However, during the live session yesterday, we were able to spot a very significant structure which actually helped us to scoop over 200 pips on the XAUUSD yesterday. Now look at the structure we identified here during the live session yesterday. So we saw the situation here following this impulsive move to the upside. So as soon as price tested the $1,990 level, a very strong psychological level considering the round figure of that price, we saw price selling pressure resume, bringing price back into the 1,978. And what we saw prior to the live session yesterday was the fact that we have been witnessing buy pressure around that area, hereby negating all attempt by the sellers to continue to the downside. So we identify this level as a strong demand zone, as if we are going to be selling, we need price action to break down the 1,978 to give us that signal for selling opportunity. But if that does not happen, a breakout of the resistance line will definitely trigger our buy position for the day. So we had a sell stop order below the 1,978 and a buy stop order above the 1,982 yesterday, and this was exactly what happened. Price action, though it took quite a while before price action moved in our direction. As you can see here, it took about 6 hours before we finally saw that breakout of that structure. So that is why I always advise people sometimes to stay off the chart. Once you've made your decision, stay off this chart, set your buy stop order, set your stop loss, set your TP target, and leave the chart. Because if you stay on the chart trying to watch price movement, you will tend to want to change your bias and move in the opposite direction, or even jump out of your existing trade very, very early. So with the situation we had here, we had a buy stop order above the 1,982, and we saw what happened during the later part of the New York session. I think a couple of hours into the New York session, we saw price action break out of that structure, and since then price action continued to the upside. And if you remember what I said yesterday also, that we should have a buy stop order above the 1,990 level in anticipation of adding more position to our existing trade. And if you had done that judiciously, you would have had quite a lot of profit here as price action moved over, let's say for the first position, price action moved over 400 pips for the first position, and for the second position here, price action moved over 300 pips in profit. So for those who are part of this bullish move to the upside, well done to you guys, kudos to you, and congratulations for being on standby to catch that move. So right now, what has been going on in this market here in the last let's say 12 hours, I guess? Is it 12? Okay, last 24 hours. Is it 12 hours, I guess? So what has been going on here? So I shared this update on my public platform, on the TradingView platform here, during the later part of the New York session yesterday before I went to bed, as I projected that there will be a consolidation phase between the $2,025 level and the $2,015 area. And when I woke up this morning, it was just as explained during my my publication. Let's go through it quickly. I have not been sharing this with you guys here, but if you have been with me on my TradingView platform, you would have seen this update during the later part of the New York session yesterday. So this was the channel we identified during the live session yesterday, where we were looking out for either a breakout of the resistance line and the support line for trading opportunities. So we saw the big bang come out, strike out of structures to hit our TP target. So this was yesterday night here before I went to bed. So I shared this publication here. I said, following the test of the $2,025 level for the first time this year, price action is likely going to transition into a consolidation phase before another signal pops up. So it is important that we remain patient at this juncture for any follow-up trading opportunities. So this was what I identified here yesterday night, which I shared, and during the early hours of this morning I shared this setup here where I said structure is gradually transitioning into a trend continuation pattern where the potential of price action breaking out of the $2,025 level seems visible at this point. As you can see, price action has consistently found higher lows within this channel, and to further buttress the higher lows here, I connected a series of higher lows to give us that bullish trend line, which shall be serving as the yardstick for trading activity for today. So how are we going to be using this trend line for today is what we shall be deliberating on right now. So look at what we have here. Hold on a second. So we shall be zooming into this channel. So look at what we have here. We have the $2,025 level serving as a resistant line for the week. And if you look at what has been happening within the channel, you will see that price has not dropped below, has not found a low here. Instead, has been finding higher low. And when we connected a series of higher lows, we have this bullish trend line figured out. And if you look at the structure here, it's looking more like a ascending pennant actually, which obviously has a tendency of a trend continuation pattern, and at the same time a reversal pattern too as well. Now with the kind of structure here, you all know what we look out for whenever we have this kind of simple setup. We want to see price action break out of that resistant line to give us a buy opportunity, or a breakdown of the support line here to give us selling opportunity. And I shared there this morning that we are going to be looking forward to a breakout of the $2,025 level for a buy opportunity in this market. And if you had followed this instruction, you would currently be in profit right now, as price action has actually broken out of the $2,025 level, as you can see here. And we should be having a stop loss somewhere right below the structure, which could be dovetailing into somewhere between the 55 and the 60, between 55 and 60 pips thereabout for a stop loss on this one. And I'm thinking that we should have a TP target somewhere around the 2045, because the reason why I've said this is simply because we've already had a test of the $2,070 level before sometime last year, which was the highest point the gold has been so far. So we are still looking forward to price action to continue to the upside. So we might likely be looking forward to around a 200 pips profit move if price action continue that way. So with the situation we have here, we shall be using this bullish trend line as a yardstick for our trading activity for today. So what this simply means is that if price action continue to trade above that bullish trend line, we shall feel comfortable in the buy position, looking forward to more opportunities to add more buy position to our existing trade. So we might see a situation where a breakout happens, price action comes back to do retest of structure, buy pressure gives us more opportunity to add more buy position to this existing trade. Now there is a caveat to this current setup here that I always like us to also take into consideration while planning our trade for today. And one thing about this is the fact that this is the first time price action will ever get to the $2,025 level. And from my experience in the market, it is very, very important that we remain cautious around this area. So in order not to expose ourselves with too much risk, and well, since we are already profitable on the XAUUSD so far this week, you might afford to relinquish some of your profits just to test waters around this area to see if the bullish momentum here is going to work out. And one thing about what I was trying to say earlier is that whenever price action finds a new high, there is always this tendency of price action to try to acclimatize and get comfortable around that area, and this might take some time before that happens. and this will also reflect on the chart in the form of retracement phases, consolidation phases, choppy situations around that area where people are trying to get their grounds around that area before that bullish move happens. And you can see what happened also a couple of weeks ago on the XAUUSD when price action tested the $2,000 level. You can see it took quite a while before price action got acclimatized to that area. So we saw a lot of consolidation phases around that area before the momentum finally gathered yesterday to break out of that structure. And I'm of the opinion that the same thing could happen around this area too as well before the breakout of the significant breakout of that $2,025 level will happen. And because of this expectation, because of this thought process, I'm of the opinion that we should also take into consideration the potentials of sellers at this particular juncture in this market. So since we are already having this bullish trend line, which will be serving as a yardstick for trading activity today, well, a breakdown of that trend line will now give us a signal that there is a likelihood that price action will want to go through a retracement phase, which is always a result of profit-taking activities, as those who are taking advantage of that bullish move right from the bottom will at one point want to make some profit off that position and want to be doing some selling. So if a breakdown of that bullish trend line ever happens today, then we should have it at the back of our mind that the potential of a retracement phase might likely come in. But remember, we are not getting too excited as soon as price action breaks down the trend line. We still need some confirmation to happen, and the confirmation we are going to be looking forward to will come in the form of price action coming back to retest the trend line that was broken. It might even go as far as retesting the $2,025 level. But the most important structure we want to be seeing, the most important pattern we want to be seeing is selling pressure below the structure, where price could transition into a reversal pattern. Then we might be in for a retracement to the downside, where a further breakdown of the $2,015 level will welcome additional sell position in this market. So these are things we are going to be taking into consideration. It might look a little bit overwhelming at times, but what can we do? The market is a very fluid environment, and for us to be profitable and in fact consistently profitable in the market, we want to be as fluid as possible. So at times we might have to relinquish some of our profits just to understand what is really going on around that area before we want to be moving on with the next impulsive move that we are waiting for. So let's see what plays out around this area. So if we are taken out of the buy position, it's okay. We're actually profitable on this commodity before, and if a breakdown retest of that trend line happens with selling pressure below that structure, we will be getting ready to join that retracement phase to the downside. And be rest assured that I will be with you in the comment section on my TradingView platform to give you an update on what my expectations are after monitoring price action around this area. So that is that on the XAUUSD for today. If you have any questions, feel free to drop your enquiries in the comment section. So with that being said, here I will be moving on to the last pair that we are going to be taking for today, which is the USDJPY. And on the USDJPY yesterday, we were also profitable on this pair so far this week. As we can see, we have been selling the USDJPY since the beginning of this week. Remember, we identified this, though we actually had expectation of buying the USDJPY after we saw the breakout of the 133.400 level. Remember, that was our first resistant line at the beginning of the week, so we were hoping that price action will find buy pressure above this level. But for the fact that we said if price action drops below the 133.400 level and selling pressure resumes below that structure, we are going to be in for a bearish momentum, and that was exactly what happened here. As you can see, on Monday morning we had price action move over, I think, over 100 pips in our favor. Yes, over 100 pips in our favor before this bullish momentum happened. And during the live session yesterday, I told us all that we are going to be focusing on that 132.850 level, and we are also going to be taking into consideration the breakdown of the structure that happened on Monday. And you all know from a theoretical standpoint, from a technical view, whenever price action breaks down a key structure like this, we expect that one point in time price is likely going to be coming back to retest that structure in anticipation of a move in the direction of the prior leading price action. And look at what we have here. We can see how price action has consistently rejected that area. And remember what I told you here yesterday. I said if price action ever breaks above this level, we want to see a beautiful confirmation for us to be able to buy, and that is we want to see a significant breakout of structure, and we want to see consistent buy pressure above this level for us to be part of this move to the upside. And if price gets into this level, we might likely be seeing a pull to the downside. That is the first scenario we talked about yesterday, and I told us all that if price action drops below the 132.850, then we might be in for a sell momentum if price action drops to the further to the downside. And some people would have taken advantage of this 132.850, but we didn't get into the trade until the breakdown of the 132.500, as we never had enough time to be part of this. I didn't actually see the breakdown retest of structure around that area. I think price action moved so fast there, I missed out on that opportunity around that area. But with the sell stop order placed right here yesterday, we had our sell position triggered, and since then price action has currently moved over 100 pips in profit right now. And for those who are part of this trade, so far in the last 24 hours, well done to you guys for being on standby to have caught this move. So what we are going to be doing as usual is to ensure that we secure this current position so that we don't miss out on we don't get caught up in any sudden pullback that might likely happen at this point. So I will be advising us to move our stop loss right now to somewhere around the 131.900 area, just to secure this position and give room for price action to breathe. So let me share with you the update I made on the USDJPY so that we can, okay, hold on a second, let's do this. Okay, so let's run through what happened yesterday, how we were part of the sell momentum here. Okay, so this was what I shared here following the fallout from our morning live session. So we had a simple setup here where we're saying that if price action ever breaks down that bullish trend line, we shall be in for a sell momentum. As you can see here, we had the breakdown of structure, and it was not until after price action broke down the 132.600, which was projected here, that we looked for selling position. So we rode the move all the way to the downside here. And during the early hours of today, I shared this update that we should secure our sell position. And a couple of minutes after, I did an update here where I identified a simple setup on our lower time frame where price action was trading between the 131.800 and the 131.400, which lasted about 12 to 14 hours at that point. And I told us all that we are going to be looking forward to either a breakout or breakdown of that channel for trading opportunities. So with your sell stop order below that 131.400, at this time you must have had your sell stop order triggered. So let me go into the live chat of that update I shared there, because I normally use a new fresh chart entirely to make things a little bit easy for the eyes to see. So we have the simple setup here on the 30 minutes time frame, which I shared earlier. And if you had been part of this, another position would have been triggered for you had the breakdown of the 131.400 level. So stop loss should be somewhere just around the resistance line here, which will be dovetailing to about 30 to 35 pips. And let's see how far this move is going to go. Now for take profit target on the USDJPY, let's look at the daily time frame so that we can see how to look at structures to use to guide this TP target for the USDJPY. So if we scale up into the daily time frame, let's look at the structure we have here on the daily time frame. So we have something like this, and remember the importance of the 131.00 level. It's a very, very important key structure which has a memory for buying power. And if we consider the lifespan of that buy pressure there, you would realize that that area is a very, very strong zone for buying power. So you can see what has been happening around the 131.00 level since the month of April of last year. You can see it has been a strong buying niche. So at this point, we might want to have our TP target within the 131 and the 127.00 level. And while we have our TP target within that area, we should take note of the 131.00 level. So what I simply mean here is that as soon as price gets into that 131.00 level, we want to move our stop loss to secure the current sell position. Move your stop loss accordingly, secure the current sell position, and it now depends on how price action reacts to the 131.00 level that will determine if we are going to be adding more sell position or getting ready to buy. So if a breakdown retest of the 131.00 level happens on our lower time frame, we will have no other choice than to start looking out for selling opportunities. But if buy pressure resumes above the 131, then it will be one of those bullish expectation around that area to anticipate a trend continuation to the upside. So these are things that we shall be looking at, and I'll be with you in the comment section to give you an update on how to go about that situation around that area. So on this note, I want to call it a day here on the morning live with Sheriff, and I hope you all are able to take one or two things out of this and well equipped enough to be able to be as flexible as possible to be able to take advantage of any potential trading opportunities lining up for us during the UK and the New York session today. I can see your comments daily. Please still expecting the Telegram group. It's very easy to keep up from there. All right, I really do understand what you mean, and I'm just trying to see how that channel could be active so that I can be consistent about, because I really don't have followers on my Telegram channel, but I will see what I can do. Maybe we should just start with something. I will look at it and I will share something with you probably tomorrow, and let's see how things works out from that area. So don't worry, I will work on that, please. Thank you for that feedback. And I think on this note, I want to wish you best of luck during the UK and the New York session today, and I look forward to seeing you right in the comment section as usual on my TradingView platform as we continue to monitor price action. So best of luck, everyone. Do have a wonderful evening, and I look forward to seeing you same time tomorrow as we get prepared for the Thursday trading session. Bye bye, everyone. Bye.